Hey traders, welcome back to this video. So I'm going to talk about why do new traders fail. So whether you're trading Forex, whatever it may be, but particularly if you're a brand newbie trader, why do many people fail? And there's a lot of reasons for this, but let's look at a couple of them. So the first one is no strategy, right? You start out, you put some money in the account, you open an account with a small amount, you get going, you tried this, you tried that, you're long this, you're short that, you're long yen, short pound. You don't have a strategy, and before you know it, you're purely trading from an emotional, gambler's perspective. You don't have something that's focused. You're literally going, I think that's long, I think that's short, and your equity curve will probably kind of look like this. You'll start off from zero, maybe you'll make a bit. You'll think, hey, this is great. I've made, a few £100, and then very quickly, this is what will happen. You'll go back to well, assume that's your zero line here, actually, whatever that may be, whatever your starting balance is there, and then there's your zero line, and you go back, and then you're out of the game. Okay, that's going to be generally, or you might have a little spike back up where you get a bit lucky, but no strategy. You're trading too frequently. You're kind of, in fact, that's probably number two as well. Let's put that in there, guys, because that shouldn't really dismiss that as a nothing. That is a very, very important thing, even though it is wrapped in with a strategy thing. So, you're trading too much, okay? The reason that's a problem is it comes back, sort of dials in with this no strategy issue, is that if you're trading too much, you're trading when you don't have an edge. When you don't have a specific setup that you want, whatever that may be, whatever technical setup, whatever, it doesn't really matter. As long as you have a strategy, it means that you're not going to be trading too much. If you're trading too much, you're taking substandard setups. You're almost tossing a coin. You'll think it's long, you'll think it's short. And that ultimately, when you think about it logically, means that you're probably going to be okay. But in reality, that then triggers you kind of psychological a process of risk reward that humans are naturally wired. We're naturally wired to be very cautious of risk, to be very grabbing of reward. So, you end up defaulting to the kind of chimp mode of a human. So as soon as you see some profit, you grab it. And when you see a loss, you don't want to take it. So your losses get bigger and bigger and bigger and bigger. And you just default into that kind of self-destruction mode, and that will just damage you quickly. And if you're trading too much, of course, you're paying every time you trade. The spreads are relatively tight now. You can trade currency pairs from very, very tight spreads. If you're scalping and hammering away every day, that's going to cost you a lot of money over time. And if you're doing it when even if you did it 50-50, you're going to lose money day trading that because of the spread. But if you're doing it when you don't have an edge and when you've got that psychological damage that you're holding on to losers, and you're not taking and you're not holding on to winners as much as you should, your account's just going to get annihilated. So number three, guys, is that another thing is you've got no risk management. Okay, you've got no risk management. In other words, you go into a trade, or a new trader goes into a trade, or they go into a sequence of trades, they start trading, and they've got no concept of, capping off risk into either a trade level, a real micro level, or at a macro level, account level. So in other words, they start off with an account, let's just call it £1,000 for argument's sake. Could be 10 times that, could be 100. Doesn't matter. They start off with that, and they just pick a number. They say, okay, well, I'm going to go £10 a point, and they don't kind of work out, okay, well, on a trade level, I want to risk a maximum of, £100. I mean, that's a bit much for 1,000, but whatever it may be. So 5 losing trades in a row could wipe me out. So, okay, I really only want to risk £20 to get started, or £10. So that means £10 a point's way too much. £1 a point's even a bit much. Let me start out with this, and kind of working out, your worst sequence of losers. Where's that going to put you? Where you could draw down to, because without risk management in place, even if you're a good trader, you still could have a string of losers in a row that wipes you out. Even if you have got a really good expectancy, if you're too aggressive with your capital and you're risking too much, it doesn't take much of a string before you've wiped out. So just understanding that even if you've got the best strategy in the world, you still must have that. But if you haven't got a strategy and you have no risk management, you end up struggling. Okay, the fourth thing, which is a really key one, guys, is time. And what do I mean by time? This is a big one, I think, is that people don't give themselves, I'm saying you, I'm not addressing you specifically. If you're a new trader, then perhaps I am addressing you. Maybe I'm addressing somebody who has just started trading. But you don't give yourself the time to actually learn the craft of trading. It's a tricky, challenging business. You know, to get to a level where you can trade and you can make some money out of the market. I'm not even talking about a level of, you know, making 7 figures a year, whatever. I'm talking about being able to make money from the market over the long term, however you define consistency. It's a challenging game and you need time to get there. And unfortunately, one of two things happens. Number one is people get disheartened with it. They start out, they lose, and they get so disheartened with it, they give up on it. The other one is they run out of capital. So they trade, lose all their money, give up on it. Maybe they refresh the account a couple of times, but they give up on it. So they don't give themselves the time. So instead of saying, you know what, I've got this amount of capital to allocate to learning to trade, okay, whatever that figure may be, and it's going to take me a couple of years until I want to see some gains, or whatever you decide is the right time. You've got to give yourself a little bit of a chance here and say, okay, well, to do that, I need to risk X amount per month. And if I lose everything, and lose every single month for the next 2 years, I will have lost it all, but I will have got to a certain point that I can decide whether I want to refund it or not. And what a lot of people do is they accelerate that loss by adding to the position, and they, instead of looking at it from a perspective, hey, I want to get in a period of time ahead to be a better trader. I want to have learned more. I want to be more specific in my strategies. I want to know what I'm going to trade. I want to know who I am as a person, how I want to trade, swing, scalp, whatever. That's where I want to be in a year or 2 years. Instead of saying that, they say, I want to make X amount of money in 2 years. And of course, when you anchor that goal to the money, when you haven't yet kind of mastered the skill, then unfortunately your equity curve goes lower and lower and lower. You try and make up for it by increasing your size, it just steepens the curve, and then you get wiped out, and then you kind of give up on it. You haven't given yourself the time to learn it. You know, time to learn it. Small size, open your account, get yourself some, some small money, just improve, get your strategies. Don't trade too much, kind of work out what kind of strategy you are, that's the type of time frame you're trading, the type of markets you're trading, what pairs you want to trade, and then working out a decent risk management plan. All very simple stuff, and there's some videos on this as well on the channel, guys. You want to check it out, and then giving yourself the time to work it out. And that's the big one for me, is that people trying to get it too quickly, trying to get to the point too quickly. Giving yourself, appreciating that it will take time to get to even a level, a small level of profitability. So understanding that, and then saying, okay, right, this is how much I need to risk per month to get to that level. So just some of the things, guys, why some new traders fail. There's a lot more that we could go into individually in terms of, people being greedy, being fearful and stuff. But generally speaking, I would say these are the 4 key points that it does come down to where most traders fail because of this. So if you like this video, give it a thumbs up. Don't forget to subscribe if you haven't already. Stick any comments you have in the comments box below. It'll be interesting to know your thoughts, whether you're a new trader, what you're struggling with, what you're not struggling with. If you're a seasoned trader, do you agree with that? How did you start out? What was your kind of failure point, and how did you get to where you were now? Any comments like that, more than welcome, and I'd love to see what you guys have got to say about this thing. All right, take care, good trading, guys. I'll see you in the next one. Bye.